Welcome back. A sobering update from the world's biggest spirits maker. It's Diageo, the company behind labels like Johnnie Walker and Guinness and Don Julio tequila and more, slashing its sales and profit outlook after reporting a weaker quarter. Shares are now trading at their lowest level in roughly a decade. So let's bring in our own spirits and alcohol industry reporter, Brandon Gomez, with highlights from the quarter. What exactly was the impetus for the negativity around this particular earnings?
Yeah, absolutely. And they raised a new red flag, which we'll get into here. But first, net sales came in at $4.9 billion. Now that's down 2% year over year. Organic sales flat, better than analysts feared, but pricing and product mix took a toll. Volumes actually up nearly 3%, but not enough to lift results. Now, Latin America was a bright spot with strong demand in Brazil, but the biggest hangover markets, China and the U.S. China sales dropped more than 7%, while drinkers here in the States traded down faster than a college bar crowded at last call. Organic sales falling nearly 3% here. Diageo saying drinkers are swapping out premium tequilas like Don Julio and Casamigos for cheaper pours. Now that, Dom, is what's new. For a while, tequila and mezcal have been the resilient labels, with whiskey and beer under pressure. But the company's interim CFO calling it a, quote, clear shift down in quality as consumers tighten their wallets in tabs as well. And because the company caused the company to cut guidance. Now, Diageo isn't alone. The entire premium spirits industry is feeling a post-pandemic hangover. Inflation-weary consumers, moderation trends, and tariffs shaking up global trade. Mix in Diageo's leadership remains in flux. CEO Deborah Crew left in July with no replacement in sight. For now, though, Diageo's message to investors is wait for more guidance after the holidays. Q4, of course, the most important for booze sales, with all of the holidays loaded in New Year's, Christmas.
Where exactly are we, though, seeing? You mentioned some of the weaker areas. In quarters past, we've highlighted some of the demographic shifts and demographic consumption trends that are happening. Do any stand out for Diageo? Does it continue to echo what companies like Constellation Brands have told us in the past as well?
Yeah, absolutely. I mean, you're probably referring to Gen Z consumers who are drinking less. You obviously hear all of the fitness trends and prioritization of health and wellness in that demographic. You've also heard from a lot of the other companies about the Hispanic American consumer. Constellation Brands, that's a core demographic for them, makes up 50% of their beer business. And you can see here some of the comments that companies have made this quarter so far. Constellation Brands saying 80% of those surveyed Hispanic and non-Hispanic consumers worried about the economy. Molson Coors, Boston Beer also weighing in on the weakness in Hispanic American consumers. And it extends beyond beer. You heard from Colgate-Palmolive, PepsiCo talking about that demographic too.
Yeah, it's one of the reasons why Modelo, no longer the best-selling beer in America. It's now Michelob Ultra per those trends as well. Brandon Gomez, thank you very much.
Thanks, Tom.
All right.